Are cracks starting to form in Canada's job market? Recent numbers are painting a worrying picture. From Ontario's manufacturing dip to broader national struggles, April's labor data is the first clear sign that the U.S. trade tensions are hitting home. And with uncertainty rising, the Bank of Canada might be forced into action sooner than expected. Let's break it down here on Momentum Indicator, where your financial insights come first. Canada's job market stumbled in April, showing the early impact of growing trade tensions with the United States. Experts say this slowdown might stretch into the summer, possibly pressuring the Bank of Canada to lower interest rates in June. According to Statistics Canada, unemployment climbed to 6.9%, a level not seen since November. It's a noticeable shift, especially when paired with significant job losses across manufacturing and retail sectors. Ontario felt it hardest, shedding 31,000 manufacturing jobs, while wholesale and retail saw a drop of 27,000 positions. This economic hit followed new U.S. tariffs that began in March. These levies targeted non-CUSMA imports, as well as steel, aluminum, and auto parts, industries crucial to Canadian exports. In cities like Windsor, Ontario, which rely heavily on manufacturing, the toll was clear. Unemployment there spiked to 10.7%, rising 1.4 points in just a month. Economists like RBC's Nathan Jansen point out that such regions are especially vulnerable due to their trade-heavy industries. Although the manufacturing sector has held steady year over year, this is the first major decline since last November, suggesting that the pressure is mounting. Interestingly, the economy still added 7,400 new jobs in April. But this didn't keep pace with population growth, so unemployment still rose. That's a reversal from earlier in the year when job creation outpaced population trends. One bright spot. Public administration saw a gain of 37,000 positions. But these were largely temporary roles tied to April's federal election, which economists like Jansen argue may have skewed the overall numbers upward. Derek Holt from Scotiabank called the report messy, noting the temporary hiring likely included retirees stepping into short-term roles. That bump is expected to fade quickly. Wages did rise slightly, with average hourly pay going up 3.4%, though that's down from 3.6% in March. Still, there were some positives, including a modest increase in total hours worked. While RBC projects the unemployment rate to hit 7.1% by summer, Jansen believes Canada can avoid a full-scale labor market crash. However, much depends on whether the U.S. ramps up tariffs even more. Despite all this, most Canadians still feel secure in their jobs. StatsCan found that nearly 74% of workers aged 15 to 69 don't expect to lose their positions in the next 6 months. Still, those in export-heavy sectors remain the most uneasy. This April jobs report is especially crucial. It's the last one the Bank of Canada will review before making its next interest rate decision on June 4th. With its current rate at 2.75%, pressure is building for a cut. Senior economists like Ali Jaffrey from CIBC argue the signs now point strongly toward lowering rates. BMO's Doug Porter agrees, suggesting the chance of a quarter-point rate cut in June is rising. According to market data, the odds of a cut are already sitting around 64%. Even with differing opinions, one thing is clear: the Bank of Canada has a tough call ahead. And while monetary policy can help, economists stress that broader fiscal action may also be needed to cushion the trade war impact on Canada's economy. We'll keep tracking every twist in this evolving economic story, so make sure you don't miss a beat. Like this video, hit that subscribe button, and turn on the bell so you stay ahead with the Momentum Indicator.